We begin with global oil. Energy ministers from oil-producing nations met over the weekend in Vienna. The latest OPEC plus nations have agreed to cut production. Led by Saudi Arabia and Russia, several nations have agreed to extend cuts through 2024. Saudi Arabia's output will drop by 1 million barrels a day to 9 million. That is the biggest cut for the world's largest oil producer in years. The cuts are designed to address sluggish prices. OPEC Plus says they are meant to, quote, achieve and sustain a stable oil market, but not all members will be cutting output. While Russia, Nigeria, and Angola will drop output to get in line with current production values, the United Arab Emirates will be allowed to raise output targets. Well, for more on global oil and those APEC cuts, I'm joined by Carl Larry. He joins us via Skype. He is the sales director at Wood Mackenzie, Genscape, and an energy research and consultancy group. Welcome to the show. I appreciate it.
Thank you, Francis.
Well, first off, I want to get your reaction to these cuts, particularly the move by Saudi Arabia alone to drop output by 1 million barrels a day. Was this expected and to this degree?
I think Saudi Arabia gave an explanation earlier. They were like, the speculators were really trying to push the market down, and they wanted to make, a statement saying that this is what we want to do, this is how we're going to do it. I think the number's big, but, again, with most OPEC oil cuts, it comes down to what the Saudis do. So it was definitely a shock, I think, from some, but definitely something that was warranted for them.
Now, OPEC Plus members say these cuts are designed to address sluggish prices and try to stabilize the market. Do you think that will be achieved? Do you think these moves will do that?
I think that, when you see this, they're putting a bottom on where the prices should go. And I think that, with the way the economies have been kind of sluggish with inflation and what have you, we might just see where these stabilized prices. Will we go up? Pretty much, yes, we probably will. Will we go down? Maybe, but not too much. So I think they're just trying to find that balance.
It is a tricky balance, certainly. What about the timing of these cuts? We know we talked about kind of the reasons behind it, but are there other factors behind why they're doing this now in this particular point in time?
Well, we're coming into summer driving season here in the U.S. and, of course, across vacationers across the world for these next couple of months. So I think they want to say this is where we want to see oil prices, where they should be. But I also think it's an interesting timing because around this time last year, we saw the U.S. releasing barrels of oil from the SPR. So this is OPEC's way of saying, we think we're going to mitigate prices here to the downside and see if there's some upside if demand grows, but not different than what we did last year from the U.S.
And what will be the impact on prices globally and inflation? So these cuts are happening as the summer travel season is in full swing. People are flying, people are driving. So what are we going to see in terms of like the public? What kind of prices are we about to experience this summer?
Well, we'll see them rise, but I think this is going to put it to the test on where demand really is. I think when we see U.S. rates go up and interest rates go up trying to tame inflation, I think this might be a barometer of how much inflation we really have out there. Is there demand? If there is, prices will go up. If there's not that much demand, I think the prices will stay stable. But I do know that there is demand. Just how much?
Yeah, in terms of demand, what are we predicting in terms of the different countries around the world, and what has been slowing down in terms of demand, and where?
Yeah, we haven't seen much. We really haven't seen much. We've seen a lot of good air travel. We've seen a lot of good road travel. But now it's about maintaining that, seeing if we can continue that for the next couple of months. I mean, unemployment's been unbelievable here in the U.S. We've seen a really, really low unemployment rate for quite a long time. And if we can balance that with what people want to do and where they want to go, and for the prices that they can pay, we might see that demand stay strong. And if it does, it might carry all the way to the end of the year, where we might see OPEC maybe change their mind when we get to that point.
Just a couple minutes left. What is the long-term outlook, do you think? What are you going to be looking for in terms of oil production cuts and prices from your perspective?
Well, I think, OPEC, from the beginning when we saw fracking explode back in 2012, 2014, they're trying to really kind of say, this is where we want prices. So with the prices at this level, we start seeing production lower in the U.S. But maybe we can, they can easily increase it through OPEC. So I think going forward, if we see prices get back to the $80, $90, $100 level, we'll see production go back up and bring it back down to where the $70, $80 level will be. But in the near term and the short term, the next 6, 8 months, we definitely could see prices with a little bit more upside than downside.
All right, Carl Larry of Wood Mackenzie, Genscape, thank you so much for breaking this all down on this very complex issue.
Thank you, Francis.